morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. Asian stocks retreat once again today as concerns over the economic and human impact of China's deadly coronavirus rattle the global markets. Back home, HDFC's profit jumps almost 4 times due to a one-time fair value gain from the merger of its arm Gurh Finance with Bandhan Bank. IndiGo Aviation's profit more than doubles thanks to better yields and higher passenger growth in the quarter gone by. The Enforcement Directorate arrests DHFL's promoter Kapil Vadhavan under the Prevention of Money Laundering Act in connection with its investigation against dead gangster Iqbal Mirchi and others. Maruti Suzuki will report earnings today. The car maker is expected to have witnessed a pickup in growth as sales rebound. Well, but world over, while there is earnings and while there is more, and it's an important week of earnings from the US markets as perspective as well, with Microsoft and Apple coming out with numbers, but it's about coronavirus. Frankly, it's all about that. Look at what's happened to the world markets. It was amongst the worst days for a bunch of indices since some time. So for S&P 500, it was the worst drop since October. For the Dow Jones has erased the gains for the year, and Nasdaq is the worst drop since August. So that tells you volumes about how the US markets reacted yesterday and what's the quantum of cut and the magnitude of the cut that the US markets saw in trade yesterday. Now, as a result of the fall that we've seen, the S&P 500 has now triggered a fresh sell signal. And while the Dow futures or the S&P futures for now are showing some bit of an uptick, you don't quite know whether to believe in that uptick or whether those will come off as well. Frankly, past history, if anything, to look by, and I know we've looked at this for the Asian markets by and large, but if you look at the Chinese markets and both the market fundamentally and the demand impact that SARS had on the China market, it was pretty telling when it did happen. This is the chart of China during the SARS impact, and both overall growth and consumption took a strong hit during the 2003 outbreak, and which is why what we said yesterday and what we're saying today, that the outlook is muddled because the extent of the impact that this may have on markets is not known. The duration for which it may have is not known. The only thing that is known is that probably this will bring back volatility, and that it has. So the Asian screen, whatever is working right now, which is Nikkei, Kospi and Australia, and Kospi and Australia, mind you, have started off after a holiday, and both of those indices have started off with the red. But Nikkei too, which is down yesterday, continues to show a lackluster movement, and the SGX Nifty indicates a start which is about 0.25% in the red. Mind you, this may only worsen. Yesterday too, we actually closed much lower than what the start was indicating. So that's the moot point really, that one, it's unpredictability of the extent of the impact of the coronavirus outbreak, which may keep the indices, any kind of uptick on the indices, under check. I think both the Nifty and the Nifty Metal Index are trading near key support levels and therefore are key monitorables. Do we see a bounce back from these levels? Typically from this 50-day moving average, and in the case of the Nifty Metal from the convergence, we might well see a bounce, but that remains to be seen. Most people are now focusing on what broader market stocks could perform well, and I think when a chat with dealers yesterday post our market hours seems to suggest that gas distribution, things related to specialty chemicals, etc., might actually continue to find favor. So focus on individual pockets. Don't quite try to trade the index because it's very unpredictable what it'll do. And of course, because of crude price remaining subdued, and actually there is a chart on the terminal which indicates that how oil is now dropping in a range and could well signal about $50 to the WTI crude. Could well be in play as well. So maybe the oil and gas and the oil companies too could be in focus. But watch out, this is probably some silver lining for the Indian markets and otherwise dull outlook for the world. Lots of results to monitor very quickly. Firstly, the results that are going to come out today, Maruti from amongst the Nifty names, and non-Nifty, watch out for Manappuram Finance. The stock is trading at highs, as well as Tata Coffee. As also from the NBFC space, Mahindra & Mahindra Financial Services and Spandana Spooty, which come out with numbers. So pretty important numbers that you watch out for. And in terms of stocks that you need to monitor today, one, Maruti, yes, because of the results, but they're also going to increase prices to about 4.7% across select models due to increase in output costs with effect from January 27th, which is yesterday. So it's a stock to monitor. IndiGo Aviation, I won't dwell too much on it, just to tell our viewers that results were above estimates. Higher yields, strong passenger growth, higher PLF, lower costs, all of these aided the numbers. But key thing is that IndiGo numbers were above estimates, and therefore it's a stock that you should monitor in the session today. Falling crude prices also aid the sentiment on the airline companies. I was speaking about how specialty chemicals could be in focus. Navin, fluorine. It's a stock that's run up quite a bit, but the numbers seem okay. Revenues up 11%, net profit up 17%. The margin expansion pretty heartening, 25% versus 22.2% for the company, and that's the key number that I would monitor. So good numbers from Navin Fluorine. Let's see if this one has any reactions. United Spirits, we just did a story about how it's under a bit of a cloud, but the numbers are okay. The margins have improved due to lower employee cost and other expenses. And while the gross margin has been under pressure, the volume recovery in the P&A segment is probably a bit heartening. So let's wait and watch if this one reacts. Last but not the least, it's a stock that's come off quite a bit, which is Hcl Info. I don't think too many people take notice of it anymore compared to its larger peer, but they've said that they're going to scale down the enterprise and the consumer distribution business over the next few quarters due to declining business. And when a management comes and speaks about such a thing, then markets don't like it. It's a small penny stock, but could react. Let's wait and watch. However, let's tell you what's lined up on First Word today. It's the collection of the top editorial stories that we believe we should bring to you. Nikunj first takes us through the government's plan to woo bidders for assets stuck under the insolvency and bankruptcy process. Sumit then joins in to talk about IndiGo's performance in the third quarter and what's kept the airline flying high. Agam takes a look at Infosys' journey on narrowing the valuation gap with TCS. I think that's a big talking point for the markets. And then finally, Yash does a comparison between the 3 electric scooters on offer right now. The government could use the budget to send a message to prospective bidders by tweaking the insolvency and bankruptcy code. The aim is to streamline and make it easier for the potential bidder, say government sources. Nikunj Johri has the details.
The government is planning a revamp of the insolvency and bankruptcy process to make the mechanism more simple and attractive for new buyers. The government is considering to give tax concessions to new buyers of stressed assets by waiving of stamp duty, registration fees, past custom dues and GST on sale of some of the assets. The Insolvency and Bankruptcy Board of India is working on the proposal, and some of these concessions can be announced by the Finance Minister Nirmala Sitharaman in the upcoming budget to be tabled on February 1. The government is also working on guidelines for tax authorities so that they don't challenge a resolution plan that is approved by a resolution professional or a resolution plan that is approved by the NCLT. A framework is also under discussion to prevent tax authorities from coming up with pervasive interpretation of law that leads to high tax liability for the buyer of stressed assets. So the government will come up with clear guidelines that will prevent tax authorities from filing or claiming high taxes from a sale of stressed asset. Another issue that the government has now recognized is that information about stressed assets to potential buyer is currently a problem, and the government is looking to bring in more transparency to provide more and more information of stressed assets to buyers, including the liabilities that these buyers will have to take if they acquire a particular stressed assets. The government believes that foreign bidders especially do not have adequate information about these assets and need to hire a third-party vendor to do due diligence, and providing more information will help in quick resolution and taking quick decision for acquiring a stressed asset. Besides this, also being considered is providing more relief to new buyers from enforcement agencies that investigate the erstwhile management or promoter of a stressed asset. And the government is also looking to come up with new guidelines for out of NCLT settlement, especially in cases where lenders have exposure below 1,500 crore rupees, where otherwise the RBI mandates signing of an intercreditor agreement between lenders.
Well, we'll watch out for this and more, and lots of stories floating around the budget as well. Let's see what all moves does the government take, and it'll be an important day. It's this Saturday, remember, and it's a full trading day. We'll be here for sure. Okay, let's move on to results. Interglobe Aviation's profits more than doubled in the third quarter, but the 25% revenue growth was still the slowest in over a year. Sumit is standing by with a closer look at the numbers and what he makes of it. Sumit, what stood out? What were the misses?
So I'll go with the headline numbers first. The revenues were strong. The overall numbers were strong for IndiGo. The revenue growth was nearly 25.5% to close to 9,900 crore rupees. Now, though this was the slowest revenue growth in the last 5 quarters, the numbers were ahead of what analysts were expecting. EBITDA came in 41% higher at close to 1,800 crore rupees, while the EBITDA margins rose to 18.2%. Net profit jumped nearly 3 times to close to 490 crore rupees. So higher yields, stronger passenger growth rate, higher passenger load factor, and lower cost aided the numbers in the third quarter of financial year 2020 for IndiGo. So on the negative side, a higher maintenance cost and forex losses offset some of these positives for IndiGo. Now I'll go up with the positives first. Yield, now that was up nearly 1.3% to rupees 3.9 rupees per kilometer. Now this is despite an economic slowdown that we have been seeing, that the company has been able to report an yield growth in the third quarter. Along with this, if we see the fuel cost, and that was down nearly 17.8% to 1.29 rupees. Now this is the biggest drop in fuel cost reported by the company in the last 14 quarters. Now this was on the back of lower ATF prices, fuel efficient neo aircraft, and more international routes, which led to lower fuel prices for the company in the third quarter. So that is one positive that came in. Now if you see the total cost for the company, that also increased by only 2% to close to 3.69 rupees. Now this is much lower than what the management had earlier guided in December. Now they were expecting the cost to increase by 4 to 5%, but the overall cost increased by only 2% for the company in the third quarter. Now, the passenger growth for IndiGo was close to 22.7%, and the capacity growth was only 19%. Now, because of this, the passenger load factor for the company, that has increased to 87.6%, thereby aiding the financial performance of the company. Now, if you see, along with this, the company has added nearly 12 aircrafts in the third quarter, taking the total fleet count to 257 aircraft. On the negative side, if you see, the company had a mark-to-market foreign exchange loss of close to 125 crore rupees, but do remember, this MTM losses is just book loss and not an actual loss, and could be reversed if the rupee strengthens going forward. Along with this, on the cost side, one more headwind was the maintenance cost, which the company booked around 298 crore rupees, which is the additional maintenance cost that they had booked in this quarter. But this was according to the management guidance that they had given in the earlier conference call, that was at the end of the second quarter earnings. Now, on the balance sheet side, if you see, the balance sheet is yet again strong for IndiGo, with total cash balance increasing by nearly 7% to close to 20,000 crore rupees. That's the cash balance that IndiGo has. Along with this, the debt has remained largely flat at close to 2,350 rupees. So no concerns on the balance sheet side. Now, the capacity guidance that the company has given for the fourth quarter, they're expecting their capacity to grow by nearly 20%. But for financial year 2020, they have again cut the capacity guidance to 20% from 25% earlier, and this is because of the aircraft delivery issues that the company has been seeing. And for FY21, they have given a capacity growth guidance of 20% for FY21.
Sumit, just a follow-up. Yeah, that's what I was coming to. That one, while there are some silver linings, there are some issues with the numbers, and on the capacity addition front, they haven't sounded as sanguine. Is this more a trend that was anticipated, or is there a surprise here?
Well, the trend was anticipated, because if you see from the second quarter earnings, they have been continuously cutting down. In fact, from the first quarter earnings, they have been continuously cutting down the capacity growth guidance, and this is because of some engine aircraft delivery issues that they have been facing. The street was expecting the capacity growth to come in lower, because if you even see the DGCA data that has been coming in, that has been showing that IndiGo's capacity addition has been lower. So this is what the street was expecting. But on the other hand, if you see, the passenger growth has still remained strong for IndiGo, which has led to a higher passenger load factor. So that is the positive thing that we should take on from this earnings that has come in. And if the passenger growth continues to remain high despite a lower capacity growth, then it will still lead to greater utilization and thereby improving their performance.
Our brokerage is positive, negative, neutral. Does the crude price fall also feature in any of the comments that have come in?
Well, so far, brokerages have not featured the crude price factor, because it's still too early, just January, and we still have Feb and March. But yes, brokerages are positive on the third quarter earnings, because a couple of them have upgraded the stock, and most of them have hiked the target price post the third quarter earnings.
Well, that should be an interesting one. Interglobe Aviation, certainly a stock that you should monitor in the session today. Sumit, thanks so much for putting that into perspective. Yes, 11% uptick ahead of the numbers, but that's true for almost any non-index stock. Any non-index quality stock has actually had a bit of a run-up. So I don't see this as a build-up in ahead of the numbers. But since brokerages have upgraded, since crude has fallen and the numbers look okay, maybe this stock could see a reaction in the session today. Moving on, TCS has been running ahead of Infosys in terms of valuations, and I think all of us know that. It's been there for quite a while now. But will the outperformance in the December quarter and the confidence it showcased allow Infosys to catch up with its larger rival? Agam is standing by with a look at how they stack up and possibly with an answer to that question. Agam, good morning.
Good morning, Neeraj. Well, I'm going to start off with the way things have panned out for TCS, Infosys, India's two largest information technology companies, and the comparison against the Nifty IT index. So as you can see, I know this chart is a little, well, muddled up for now, and it may be hard to discern the returns, but I think the top line will give you a better idea about how things are panning out for Infosys and TCS against the Nifty IT index. So while the Nifty IT index has advanced by around, well, about 12, 7, 8 odd percent. We've seen Infosys advance by only 6% as against TCS, which has moved up by around 12% in the last 12 months. So there's outperformance for TCS as well as the Nifty IT index in comparison to Infosys. That was evident in the charts. But the other aspect that we want to talk about is that there's something amiss, and the fact that Infosys has really not caught on and caught up. Of course, notwithstanding the bout of volatility that we saw in Infosys earlier in the year because of whistleblower allegations, still, besides the fact, if you just go by the numbers, for the first 12 months of this financial year, we've seen Infosys come up with growth of around 10.5%, and TCS is at less than 8%. And this is very evident in your earnings per share numbers as well, where your growth for Infosys is much more higher as compared to TCS, and that should come up on your screen for now. So we should also have earnings per share. There you have it. And again, 10.5% growth for earnings per share against just 5.5% for TCS. Let's move on and talk about your other factors as well. And well, this is where your outlook comes into place. So while the past is the past, what about the future? What can we expect? And even in that, we do know that Infosys has hiked its revenue growth outlook to around 10 to 10.5% for this ongoing financial year, from 9 to 10%, whereas TCS suggests that they're optimistic of the 8% growth in this financial year. So this again is a clear advantage towards Infosys, not only in the past, but also in terms of the outlook. That said, let's also take a look at valuations currently. Again, Infosys is currently trading at a 20% discount to TCS, which is somewhere around 25 times, and Infosys standing at around 20 times FY20 price to earnings ratio. So Infosys is also running at a discount. So not only has Infosys done better in terms of performance and the fact that its outlook is stronger than TCS, but it has also not really caught up with TCS in terms of valuation, currently trending at a 20% discount to TCS. Also, it has underperformed TCS in the last 1 year. That would mean that, well, a lot of analysts would suggest that there's a possibility of, well, Infosys catching up with TCS, and that explains the return potential currently of around 7% from current market levels, as against return potential for TCS, which indicates a decline of 2%. The real question then is, will Infosys catch up with TCS? That is something that we will know eventually at some point.
Yeah, we will know eventually at some point. Agam, thanks so much for putting that into perspective. As we stated as well, the confidence that Infosys has showcased in the quarter gone by, can that help it narrow the lead, narrow the gap between TCS and itself? Well, as Agam said, time will tell. The last piece on First Word today is on two-wheelers. Well, TVS Motors has now joined the ranks of Bajaj Auto and Hero MotoCorp in launching its own electric scooter. The iQube is being pitted against the Bajaj Chetak and Ather Energy's scooter. Yash Upadhyay has done the comparison of how the three electric scooters stack up. Yash, take it away. How do they look against each other?
So electric vehicles is going to be the theme for the next decade, as we've been hearing from a lot of people, and we are steadily seeing new launches, especially on the electric side from most of the OEMs. But there has been significant action coming in, at least as far as the two-wheeler space is concerned. And now we have not just Ather, but two large OEMs also coming up with their electric offering. We had the Bajaj Chetak, which was announced last year in October, but now we also have TVS's iQube, which was announced just over the weekend. And with that, we have the three latest offerings, at least as far as the two-wheeler space is concerned, in the electric category. Now, let's take a comparison of how each of these models stack up, and starting first with the variants. So, while Ather as well as TVS iQube, they come in one variant only, the Bajaj Chetak comes in two variants, which is Urbane as well as Premium. There's no difference as far as the specifications are concerned, just the difference of color. So, the Premium one comes in more color options as well as the metallic options there. That is where the color thing is. The TVS iQube has only one color, black and white, which largely resembles a lot like Stormtrooper and a Robocop had a baby together. Ather is one only in white, and there are multiple options as far as Bajaj Chetak is concerned. Now, the biggest question which most of the people have, at least when it comes to the electric vehicle space, is the range. And over here, Bajaj Chetak gets full marks because it is the only vehicle in this category which has the highest range. So, in their eco mode, on a full charge of 100%, the Chetak can run up to 95 kilometers, which goes down by about 10 percentage points when it is moved to the sports mode, which is again higher than the likes of Ather at 75 kilometers in the eco mode, and 75 as well for TVS iQube. Although TVS has managed to get a higher performance out of their vehicle, where the top speed has increased to 78 kilometers, Bajaj has gone more for the range, so they've cut down on the top speed and it's capped at 60 kilometers per hour. Ather 2 keeps the performance high and they've kept the top speed at 80 kilometers. But what they've done, TVS, is the fact that they will maintain 75 kilometers as the full range for the vehicle, and if you move to their power mode, which is the equivalent of a sports mode, the top speed would be cut down from 78 kilometers to 40 kilometers. Next up is the protection and safety features. We had the ministry come out with mandatory safety features a couple of years back, making it compulsory for vehicles with 125cc engine to have CBS. So most of these vehicles, at least Bajaj Chetak and TVS, don't have it, but Ather comes with CBS installed as far as the safety features are concerned. Well, moving ahead, let's look at the battery capacity and the charging time that it takes. All three of them take about 5 hours. Ather takes 5.5 hours, but it comes with the option of fast charging, with the other two don't. The fast charging option is limited to their Ather fast charging grid, which is only available in select regions in the country as of now. So that is a bit of a caveat. All three of them, the warranty is largely similar, 3 years or 50,000 kilometers, whichever comes first, while Ather offers unlimited kilometers, but 3 years is the standard for all three of them. Now, the pricing is what is most important, and all three of them are stacked up exactly when it comes to pricing at about 1.15 lakh rupees. The on-road cost of TVS as well as Ather is 1.15 lakh rupees, while the ex-showroom price of Bajaj Chetak is 1.15. So it would go up. The on-road cost will go up for Bajaj Chetak. Availability is another issue because they are coming out in a phased manner. So Bangalore is the only city where all three of them will be available. Well, Pune and Chennai are the other two names which also get. TVS iQube only restricted to Bangalore, and their availability has already started. Ather will soon be coming up with a new bike, which is the 450X later this day. But again, mostly what we are hearing from people is that it would still be restricted, and there would be a planned rollout coming on later this year to other parts of the city. But what are brokerages saying? Well, the electric two-wheeler rollout is more practical in the sense that electric passenger vehicle would still take time to become mainstream, as two-wheelers or at least scooters in specific are used for shorter distances, and that would address most of the concerns with respect to the range anxiety. And the entry of these mainstream OEMs, that would drive the adoption going forward. So that's a big positive, at least for the electric two-wheeler space. And lastly, the biggest problem still remains the pricing. We saw that all three of them, while they are priced equally at around 1.15 lakh rupees, they are still at a premium. So take a look at the price of the BS6 variant of the Activa, which is the top-selling scooter in the country, and even that costs on road somewhere around 75,000 rupees, which means at least a 50% premium for these vehicles. So pricing is still a bit of a cause of a concern, and it neglects or negates some of the benefits that come from the savings with a adopting an electric scooter, but that is something that probably might get addressed as these things have become more mainstream and the pricing comes off.
Just one small follow-up, Yash. How the sales numbers look like. I remember speaking to Ather Energy about 3-4 months ago, and they had spoken about how the numbers looked very positive. I think TVS has just come in, but Bajaj too has been a recent launch. How's the demand situation been for them? Any word on that?
So they've only just started with their bookings, so we don't really have a proper clue, but these are very, very low volume products as of now, and they'll only start to catch up once they become more mainstream. Right now, the volumes are very less as part of their electric initiative.
Yeah, and also the fact that because they're available only in Bengaluru is a common city, and in 2 of the other 3 cases in Pune as well, seems that the market that they're trying to do is also a limited test market of sorts, and then maybe pick it up over the mainstream.
Exactly, and because Bajaj and TVS, they have a wide distribution network, probably for them moving on in the other parts of the country might be easier relative to something like an Ather.
Small question, Yash. What's that gig about Stormtrooper and a baby of Stormtrooper and some
well, you gotta look at the TVS iQube. It looks a lot like a Stormtrooper and the RoboCop had a baby, and it looks something like that.
Okay, if you insist. But Yash,
that's what I personally feel.
Okay, sure. Thanks so much for putting that together, Yash. So, well, that's the piece on the 3 electric scooters in a very limited market thus far. Let's wait and watch if it becomes mainstream sooner rather than later. We all hope that mainstream it does become. It's just cleaner fuel. That's all that we have on First Word today, but lots more lined up on Indian Open. We decode the HDFC's earnings with Vice Chairman K.K. Mistry, GM Pfaudler's earnings with Managing Director Tarak Patel, and the market strategy ahead of the budget 2020 with Pramod Gubbi of Marcellus Investment Managers. But after this break, a full tilt towards the day's trade.